The housing market is moving at its slowest pace in more than a decade. And depending on which measurement you're looking at, some activity levels are comparable to what we saw in 2011 or even 1995. And the most interesting part of this situation is that the market is not slow for everyone. Oh no. Luxury homes are still attracting buyers with strong purchasing power, while activity at the entry level is shrinking because many price-sensitive buyers simply cannot afford today's combination of high home prices with high mortgage rates. So the million-dollar question is, are we in a housing crash? The short answer is no. However, we have a very divided market, and in this August 2026 market update, I'm going to explain what it means for the Phoenix, Arizona metro buyers and sellers. This is Selena Costa with Real Broker. Welcome to August 2026 Phoenix Real Estate Market Update. Let's start with the overall picture, shall we? Mortgage rates are hovering between 6.5% and 7%, combined with high mortgage prices, have created a nationwide affordability problem. Buyers are hesitating, and many homeowners don't want to give up the lower mortgage rates they already have. As a result, fewer homes are changing hands. And here in Phoenix, Arizona, this is the slowest market in terms of transactions since 2015. But when you hear that the housing market is balanced, you have to be careful because that surface level balance does not tell the entire story. We're actually seeing what economists call a K-shaped market. Imagine the letter K, and one part of the market is moving upward and holding strong, while the other part is declining. The upper part of the market is the luxury market. Inventory and buyer engagements have remained relatively resilient because these buyers tend to have more cash, more equity, and greater flexibility. They are less affected by inflation, mortgage rate changes, and monthly payment increase. The lower part of the K is the entry-level market. Both the share of available homes and buyer engagements have contracted because the people shopping in this range are much more sensitive to price and interest rates. Some have lowered their budgets, paused their search, or exited the market altogether. In other words, there is still money moving around for real estate, but it is not moving equally through every price range. We can see this by comparing listing prices with homes receiving the most online views. The percentage of listings available in each price range compared with the percentage of buyer views and the average number of views each property receives. All of these three measurements tells us something similar. High-end buyers are remaining engaged while affordability is pushing many entry-level buyers out. And that's why one headline or one Phoenix, Arizona-wide statistic cannot explain what is happening with your particular home. Now, what are buyers getting for their money? So far in 2026, the median single-family home in Greater Phoenix is approximately 2,000 square feet, with a median sales price of $450,000. But the median price doesn't always tell you the full story either. It doesn't explain where the home is located, its condition, its size, or whether the buyer received incentives. And in the valley's growth areas, buyers can find something cheaper than that. Areas like Buckeye, Surprise, the city of Maricopa, and other parts of Pinal County can offer buyers more square footage for their money, especially in new construction. Builders are also offering incentives that resale sellers may find difficult to compete with, including aggressive closing cost assistance and mortgage rate buydowns. This last weekend, I went to visit some new home builders, and everyone is offering a variation of the following: some sort of discount to the advertised price, all of the closing costs paid, and reduction of the interest rate equal to 3.9%. If you are a resale seller trying to sell your home and try to match those incentives, almost impossible. The summer slowdown may create additional negotiating opportunities for buyers. Homes under $400,000 have received strong interest throughout the parts of the West and the Southeast Valleys this year, but fewer summer showings can make it easier for a prepared buyer to secure one without facing as much competition. Among Greater Phoenix closings between $300,000 and $400,000, during the past 3 months, approximately 7 out of 10 sellers contributed towards the buyer's closing cost. The median contribution was $10,485. That contribution may be used for closing costs or some sort of mortgage rate buydown to help offset today's higher rates. This doesn't mean that every seller will automatically give you $10,000, but it shows that buyers may be able to negotiate more than just the sales price. In my experience, my buyers are getting a lot. A little discount on the price, seller concessions, sometimes as high as $20,000. Now let's talk about sellers, because August can be one of the most frustrating times to have a home on the market. I call it the summer slog. Homes sit longer, showing activity slows down, and some of the available inventory begins to feel stale. That can leave sellers wondering whether they should remain patient, lower their price, or take the homes off the market entirely. But this is exactly where we need to look beyond that general market. The most useful information is specific to your zip code, your price range, your property type, and your competition. First, I look at activity. How many showings are homes in your price range actually receiving? I do a lot of research. I also call the agents around your listing and try to understand what kind of activity they're getting. If your home has had very little activity, but competing properties are experiencing the same thing, the problem may be an overall level of demand. There is simply no buyers for your type of home in general right now. Next, I look at how many homes are accepting contracts every week. Sometimes an entire price range can go 1 or 2 weeks without receiving a single contract. In that case, patience may be appropriate. If there's 3 or 4 or 5 competing homes going under contract in your area while yours is not, we need to understand what those homes offered that yours did not. Were they larger? Were they more updated? Did they have a pool, a premium lot, or better incentives? Or did they simply reach a price buyers were willing to accept? I also compare the number of available listings with the number of contracts being written. If supply continues to rise while contracts remain flat, it may be time to revisit that strategy. If supply is dropping and contracts are increasing, remaining patient makes more sense. And finally, I look at the average price per square foot. A home price above the range needs to offer something above average, whether that's superior condition, an oversized lot, a guest house, extensive remodeling, a pool, a great backyard, or a premium location. Price per square foot is not the entire story, but it helps us understand what today's buyers are responding to. And because of this K-shaped market, the right strategy can change significantly from one price range to the other. What is working for the luxury seller may not be working for a seller under $500,000. And what is happening in Buckeye may be completely different from what is happening in Chandler and Scottsdale. By late September, we normally begin to see more listings enter the market. That means sellers who are actually listed need to pay close attention to what buyers are saying and doing. The goal is not simply to stay on the market. The goal is for your home to become a close comparable sale, not remain an active competitor. If you're thinking about selling and buying another home, this market may feel disappointing on the selling side, but you may regain some of that advantage when you become a buyer. You could potentially negotiate the price, the closing costs, repairs, and interest rate buy down on your next home. That is why you have to look at the entire move, not just one side of the transaction. After 20 plus years in real estate, I can tell you that there is rarely one market that applies to everyone. Your market depends on what you own, where it's located, its price range, and what you plan to purchase next. So if you're considering buying, selling, upsizing, downsizing in the Phoenix area, especially in the East Valley, reach out to me. I can look at the numbers that apply specifically to your situation and put together a strategy that makes sense for you. I hope this was helpful. Thank you for watching, and I'll see you on the next market update.